What's going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about Google. I love Google for the long term. I think it is a great company, but right now they are going through an extreme amount of volatility over the last couple of months. So what we're going to talk about in this video is we are going to go over their situation and what is going on with the business. Investors are really looking at the business and they're looking for one thing in particular to happen, and that really hasn't happened to the fullest extent to what investors are really wanting for the business. So we are going to jump into that, and that is layoffs. We're going to go over a lot of interesting metrics in this video, and then we're going to take a look at the valuation of Google and where it could be headed in the future. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. As I mentioned in the intro, Google has gone through a lot of volatility over the last 6 months. We can see that the stock was trading around $105 and traded all the way down to around $83 in October-November time period, and that is a 20% move. And then the stock turned around and actually ran all the way up from $83 back to around $101, and again that is another 21% move up. And then we saw the stock actually trade down from there back to around $86. There we have a 15% move, and then from $85-ish it ran all the way back up to $107, which again is around a 25% move. And then the stock ran back down into the 80s, and that was around a 20% move. And then we have seen again in the last couple of weeks the stock actually run up and is up around 14% in just the last few weeks. And there are really two reasons for this volatility. The first being overall inflation. Obviously inflation has bounced up and down over the last couple of months, and really investors are still trying to figure out what is going to happen long term with inflation. But the second thing, more relating to Google, is that investors aren't sure how Google is going to approach cost cutting, right? This year for a lot of businesses are focused on cutting costs and reducing a lot of their overhead, and Google back in January announced that they were going to be laying off 12,000 employees, which is around 6% of the workforce. But since then, really there hasn't been any additional updates. Are they going to lay off more people? Are they fine with this 12,000? Have they laid off all of these 12,000? Is what's really going on with the business behind the scenes? So that is the question that's kind of going on, that's leading to a little bit more of this volatility. And we've seen Google kind of continue to add employees over the last year or so. So 2021 to 2022, they actually went from around 150,000 employees to 186,000 employees. So this is a major jump in a very short amount of time. And we can see those numbers captured better here with this chart. So in 2022, at the end of the year, they were sitting around 190,000 employees. In 2021, they were sitting at 156,000. And then in 2020, they were sitting around 135,000. So if you look at this number, right, they've added around 50 to 60,000 employees in just the last couple of years. So basically, they have added around 30% of their workforce in just the last 2 years alone. And the big concern for investors is what we're seeing here. So Alphabet reported median employee salary compensation of $273,000 for 2020. That's an increase from $258,000 in 2019, according to company filings. So again, these are huge numbers that we're kind of seeing in there for salaries. The one thing to keep in mind with a company like Alphabet is obviously they hire a lot of engineers. They are mainly focused on engineers. They keep their workforce relatively slim. They don't have a lot of like retail type positions that you might see with Amazon, where they can compensate those employees a lot lower than these engineers. So again, that is one thing to keep in mind. So the figure is well above the median employee pay of $111,000 for top 20 US publicly traded information technology firms. And this is by market capitalization as of 2020. So again, these two numbers are pulled from 2020. So this $273,000, that is their median compensation for employees, and then also this average compensation. So that is another thing to keep in mind. It could actually be a bad thing for Google, because basically we're looking at pre-pandemic levels for the most part. Over the last couple of years, obviously we've seen inflation take off in a massive way, and a lot of employers, at least that I know of, have increased pay to kind of match that inflation and try and keep up with it and stay competitive overall. So obviously adding 30% of your workforce in just the last 2 years is going to add a lot of additional costs that are going to weigh on your balance sheet and on your EPS. But one thing that people always tend to bring up as well is CEO compensation. So there's a lot of interesting metrics here. I like this chart. You have actually Alphabet down here. So this is that $273,000 number for their median employee salary. And then this is the factor basically that you have to multiply this number by to get to the CEO's pay. So the CEO's pay for Google as of 2021, I believe is when this data came out. So August 24th of 2021, basically basically Google CEO was making 27 times what the average employee was making. And then you can see that these numbers get progressively worse as you go up the chain. So you can see Microsoft, their average employee is making around $172,000 and their CEO is making 257 times that number. Apple is sitting around $60,000 for their average employee and their CEO made 256 times that. So one other thing just to mention on here. So earlier in the article up above, I'm not going to dive into it a whole lot, but they mentioned that in 2019, Alphabet's CEO made actually 1,000 times the next closest employee. So a lot of this compensation really for the CEO is dependent on how the stock performs, and that is going to affect a lot of these numbers. So basically they said that in 2019, the CEO of Alphabet got around like $280 million in stock-based compensation because he had been there for 5 years and the stock had performed well over those 5 years. So that is one thing to keep in mind. The last thing I wanted to point out with this chart is basically Alphabet's closest comp, in my opinion, on here is actually Facebook. So Facebook and Alphabet, they have a very similar business model where they're running advertisements. They also primarily both hire engineers. So when you look at their pay, they're actually very comparable. You see Meta is sitting at $262,000, while Alphabet is sitting around $273,000. But the big difference to note is over the last year, Meta has actually laid off a number of employees and has been very abrupt about how they kind of target these cost efficiencies. Well, Alphabet has been a lot more, withheld. They haven't laid off as many employees. They only have that one round of 12,000 that they talked about in January, and they really haven't pushed a whole lot to increase their overall efficiency. It hasn't been a big talking point during their earnings calls, other than around 6 or 8 months ago. They did have an all hands on deck meeting where they talked to employees about reducing holiday parties and things like that. But overall, it hasn't been as big of a notice for Alphabet, and for Facebook, it's been a lot more of their focus. So you can kind of see that in the two stock prices because Alphabet has, basically traded sideways over the last 6 months, while Facebook is up in a very significant way over the last 6 months. I want to close out the video by taking a look at Google's valuation. So what is important to look at is where their earnings are headed over the next couple of years. And here we have Yahoo Finance. There are 43 analysts covering it in 2023 and 43 covering it in 2024. We have an average estimate for 23 of $5.12, a low of $4.16, and then a high of $6.46. And then those numbers progressively just get better for 2024. So we have $6.15 for the average, $4.89 for the low, and then $7.45 for the high. And with those earnings, we can figure out what the current forward P ratio is sitting at. So based off a earnings of $5.12, the current forward P ratio is sitting around a 19.85, which in my opinion is fair value for Google. And then when you look at the low estimate for earnings, it's $4.16. That is a forward P ratio of 24.43 based off the current price. And then for the high earnings of $6.46, we would actually be at a 15.73 forward P ratio. So as I mentioned, in my opinion, a 20 is around a fair value for Google, but it honestly will trade up to around a 25 to 30 on a lot of occasions. So what we've done here is we are comparing their current P ratio to their potential forward P ratio, so they could potentially go up to a 25 to 30. And then we have a resulting price if the stock were to trade up to those valuations. So if it were to trade up to a 25 forward P, it would actually be trading at $128, which would be almost a 26% move up. And then at a 30 forward P ratio, it would be trading at $153.60, which would be an over 50% move up from the current stock price. And even when we look at the low estimate, we can see that the stock would still be trading up slightly. So the current PE ratio based off the low estimate of earnings is 24.43. If it were to trade up to a 25, we'd see the stock trade up to $104, which would be around a 2.3% move up. If it were to trade up to a 30 forward PE, it would still trade up to $124.80, which would be almost a 23% return. And then when we look at the high estimate for EPS, the current forward P ratio again would be around 15.73. And if it were to trade up to a 25 to 30, we would see the stock price trade anywhere from $161.50 to $193.80, which would be anywhere from a 58.93% return all the way up to almost a 91% return based off the current stock price. Full transparency, I do own Google stock. I like it for the long term. I think there is a lot of potential moving forward. Personally, I don't really pick up shares when it goes over 100. I like the stock anywhere from the upper 80s to the low 90s. That's kind of where I've been adding on to my position. And we've seen the stock bounce between, around 100 all the way down to that kind of upper 80 range. So I'm hoping it kind of gets back there because I'd love to add a little bit more onto my position. But for now, I'm not buying at this current stock price. So I hope you guys did enjoy the video. Make sure you always keep in mind, do not buy a stock just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into these companies and if they are a right fit for you, because your time horizon could be vastly different than mine and it could be different than anyone else that you're listening to. So make sure you are keeping that in mind and looking at these companies and how they fit into your overall goals. So with all of that said, if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.